everyone. This is Dividend Enjoyer. Today we're going to be doing a Microsoft stock analysis, ticker symbol MSFT. We're going to be going over a discounted cash flow valuation model of Microsoft. We're also going to be going over the business model of Microsoft, the specific sectors that I like, and then some risk factors for Microsoft. Microsoft stock is currently up 18.46% year to date. The PE ratio is 36.26. The market cap is $3.27 trillion. The dividend yield is 0.76% annually. The 52-week low is $366.50, and the 52-week high is $468.35. The stock currently trades for $439.33. Microsoft also has some key earnings and just metrics that I wanted to cover before we get into any of the 10K. The sales revenue is increasing significantly year over year, and this is consistently happening. They're able to grow by sometimes almost even 18%, with 2021 to 2022 growth being 17.96%, which is amazing for an older, mature company like this. Additionally, the net income has grown on average even more than that, with the net income growth from 2020 to 2021 being 38.37%, and most recently from 2023 to 2024, year over year net income growth was 21.8%. I also wanted to cover the dividend compound annual growth rate. The 3-year dividend compound annual growth rate for Microsoft was 10.22%. The 5-year dividend growth compound annual growth rate over 5 years was 10.26%, and the 10-year dividend compound annual growth rate on average per year is 10.35%. This means that on average, Microsoft is increasing the cash dividend by 10% a year pretty consistently. I mean, this is the most consistent I've ever seen. I think this dividend's very safe if you are a dividend investor that wants a good compound annual growth rate. Microsoft may be a good stock for you. This is from Microsoft's annual 10K report about their business model. Our growth depends on securely delivering continuous innovation and advancing our leading productivity and collaboration tools and services, including Microsoft 365, LinkedIn, and Dynamics 365. Microsoft 365 is an AI-first platform that brings together Office, Windows, Copilot, and enterprise mobility, plus security to help organizations empower their employees. Copilot from Microsoft 365 combines AI with business data in the Microsoft Graph and Microsoft 365 applications. Microsoft Teams is a comprehensive platform for communication and collaboration with meetings, calling, chat, file collaboration, and the ability to bring all of the applications teams use into a single place. Microsoft Viva is an employee experience platform that brings together communications, knowledge, learning, resources, and insights. Essentially, Microsoft is just saying that their main source of revenue is these business-related cash cows that they have, but they also have these other programs that are kind of their foray into better growth. So they talk about Teams and all of the Microsoft Office applications and software. And this is obviously a huge source of existing revenue for them and the lion's share of how they make their money. But they're also investing into AI tools and they're investing into Azure. So there might be a lot of growth in the future, or they might be stagnant. But essentially, Microsoft knows that as an older, more mature company, they need to be finding new vectors of extreme growth and employing all of their capital there. Microsoft is also the owner of Xbox. I'm sure everyone's aware of what Xbox is, so I don't have to read the 10K explaining verbatim what it is, but I do have it right here in case you want to pause the video and read it. Xbox is essentially bigger than what you're thinking because of the Xbox Game Pass, and Microsoft has really done a lot better than the other Magnificent Seven of laying low because they obviously have had experience in the past with antitrust lawsuits, kind of like the stuff that Google's going through right now. Particularly, though, within the gaming space, Microsoft is quietly kind of buying a lot of different game studios like Bethesda. I believe Obsidian's another one, but I have to look into exactly which ones they bought. They'll probably be on screen right now. So they're trying to essentially monopolize the gaming industry, and they're doing a good job at that. I think they offer a really good console, but they're also being smart about buying these studios so then they can also get into the PC market because they've really kind of only been on the console side of it for a while. And I think this could be a great vector of growth for Microsoft. And they really just want to make it also so that there's a network effect on the Xbox ecosystem. So as more people join in, they're able to offer a better gaming experience for gamers that choose to play Xbox. I think Azure is a really, really attractive thing about Microsoft that you don't get from other big companies. Not a lot of companies are able to find ways to grow at such a exponential rate as the Azure cloud computing component of Microsoft has. And I think it just shows that Microsoft is involved in so many things that they're constantly looking for some kind of growth avenue. And I think they're going to find another one in the future and continue to grow at a really high rate, which is going to be really important for the valuation. Now, I'm about to do a discounted cash flow model valuation for Microsoft, but I think before I go through that, I should share some of the kind of assumptions I'm going to have with Microsoft. Here is the Microsoft annual cash flow in thousands, so how much annual cash flow that they've had. As you can see, this is only from the last 4 years, and the average growth rate has been 10.64%. But from 2022 to 2023 was not a good indicator because obviously cash flows decreased. So I actually think the growth rate that we're working with is probably somewhere between 10 to 20. I think that's a good estimation for how much Microsoft will grow on average in the next 10 years. And I don't think that's crazy because they have so many opportunities to grow, even like Office, if they grow that by 2% and then they're able to grow the computing by 10 to 20 every year and every other part of the business is growing. I think they can become more efficient and grow the actual cash flow by even more. Additionally, I found a good range for the working average cost of capital to be between 8.3 to 10.19%. Um, and this was just because different people had different costs of equity and different costs of debt. But I will be using this range from 8.3 to 10.19 for the discount rate that I'm going to be using on the model. So if you guys think I should have used a different one, let me know. But I think this is a good healthy range. Also, I see that Microsoft has, revenue growth expectations of about 15.67. I think this is probably a pretty good amount of growth for the free cash flow as well. People are already projecting that Microsoft stock fair value will be $687 in 2029. Obviously, we don't know what's going to happen in 2029, but from historical evidence, that seems correct. And I also want to say that in valuing a company like Microsoft, it is as good of a company as companies get. So I honestly think that you almost can't value it in the traditional way, but I'm going to be trying with a high growth rate and the whack in the range that I said, weighted average cost of capital is whack, obviously. And yeah, I think Microsoft's going to find a way to continue to grow. I don't know how they're going to do it, but they're geniuses at it. So let's get into the valuation now. Welcome to the discounted cash flow portion of the video. As you can see, we have all of the cash flows from earlier right here. We have our growth rate at 16% and our discount rate at 9%. This, with a perpetual growth rate of 2.5% for the market, is giving us a share value of $377.53. This is obviously lower than the actual stock price. However, like I said, Microsoft's an amazing company. Maybe we go by the lower bound of these because maybe the interest rates are going to lower and maybe the discount rate's going to lower into the future. And you know what? Let's go to the upper bound of our growth. So this is the best case simulation. The stock is worth $565 if they're able to grow 20% on average from this period up to the terminal value year, which would be 2034, then the stock's worth 565. But now let's do the worst case. Let's say they only are able to grow at 10%, which still is pretty high growth. And let's say their discount rate is the very worst at 10.19%. The stock's only worth $208 in that situation. Now, I think reasonable would be about 15%. And then if we do a whack of about 9%, then it's about 352. However, like I said before, this is an extremely quality company, so people are willing to pay a premium over what is the fair value. So I have Microsoft stock. I bought in at around 410, I think. Something around there. I'm still going to be holding my Microsoft stock, but I definitely think this is something to keep in mind. And after doing this valuation, I don't think I'm going to be buying any more Microsoft stock. However, if they grow even 2% more than what I'm thinking, then that raises it all the way to 403. And if their whack is lower than this, then that brings it about to the fair value. So keep this in mind. I think Microsoft is probably a little bit high along with the entire market, and I am not going to be adding anymore. But if it drops to, let's see where I would maybe buy easily. If it drops to 352, I will be buying a ton, obviously. But I have a fair value in between 352 to 400. I think even at 400, I would probably be a buyer because I think this is a huge company with a lot of growth potential. I just think it's a little bit pricey for me right now. So let me know what you guys think. I love this company, though. I do have to say, I think everything about the company is amazing. And I think it is the most justified of a high price out of any of the Mag 7, other than I haven't even really looked at Amazon. But I definitely think if you're going to look for a company to hold over the next 10 to 20 years, I don't think you can go wrong on an individual company basis with Microsoft for the amount of quality you're getting. I just think that right now, this second, it might be a little bit expensive, but it also might just keep running upwards. Because just because my model says it should be this doesn't mean that that's what's going to happen. It could grow. Heck, I mean, the cloud computing or the AI could be huge. They could grow this cash flow by 22%. That would mean the stock's worth 562. I mean, I could be totally wrong in valuing the amount of growth they have. And Microsoft has continually just been a powerhouse at making money. So I don't think it's outside the realm of possibility at all that Microsoft is undervalued. But I also think just by having a cautious approach and by the nature of how old of a company Microsoft is, it could be between, like I said, that 350 range all the way up to 500. I mean, that could be the fair value of it. And it's very difficult to kind of understand unless you have a growth rate in mind. I actually think this is my fair value right here because this is kind of in between the two discount rates. And it's also in between kind of my growth measures on the higher side. I think $403.73 is what I'm going to value Microsoft stock at. And if it dips down to that level, I'm going to buy. I would not fault you for buying this, though. This is incredible quality. And even if it dips, you could just buy more and keep buying into the future. I think you cannot go wrong with having some Microsoft in your portfolio. And yeah, that's kind of the video. If you guys liked it, please hit the subscribe button. Please hit the like button. It helps the channel out a lot. Thank you so much for watching. And if you enjoyed this video, watch some of my other stock analysis videos, including the one I did on Costco, which is very similar in quality to this video.